Peter sort of helped out on the introductions of our panel, a really heavyweight panel in terms of knowledge and expertise about the U.S. and China. In addition, you should know about Dambisa, that she was also named one of Time Magazine's 100 most influential people in the world of science and thinking. Carly Fiorina, of course, almost needs no introduction, the first woman to head a Fortune 20 company ever, which is quite good. And her charitable works that Peter mentioned at Good 360 in Alexandria is doing extraordinary things using technology to leverage the kind of donations that really impact people's lives. Just as one example, 1.8 million books, 500,000 articles of clothing, 11,000 mattresses. I mean, these are things that really matter to people. And to Steve Hanke, who not only has a perch at the Cato Institute and Johns Hopkins, he was named one of the 25 most influential people in the world in 1998 by World Trade magazine. But if you really want to know what should, why you should think he has credibility, it's important to note that he grew up in Atlantic, Iowa, which is a very trustworthy place. Iowa is a place where things grow, and so we're really happy to have everyone here. Dambisa, let's start with you. Your book, Winner Take All, really looks at how China has embarked on this incredible resource rush, if you will, of commodities. Talk about sort of both the political and the financial implications of them doing that. Is it a good thing? Is it a bad thing?
So thank you very much. I'm glad to be here. In order to answer the question effectively, I think it's really important to set the global context of where China is operating. And in that, very quickly, if I may, just remind people in the room and elsewhere that there are two key drivers of commodities which are obvious. On the one side, we've got demand pressures and effectively what are supply constraints. On the demand side, of course, the basically size of the world's population has grown incredibly rapidly since the 1950s, where we had about 3 billion people, rapidly now increased to 7 billion. Expectations are that it will only plateau out at 2100 at about 10 billion people. Of course, China is a large piece of that. Perhaps not in growth terms, but certainly in absolute numbers. And then, of course, you've got pressures from the increasing wealth of the emerging markets and urbanization. But these demand pressures are being effectively hampered or constrained by constraints on the supply side. So whether it's arable land, water, energy, and minerals, we are seeing constraints which we can detail in a moment. China's approach has been to effectively adopt three key aspects in a systematic and deliberate approach to securing natural resources. The first aspect is to what I consider to be to rely on symbiosis. So it's going out into the world, not just in developing countries, but also in developed countries, to secure natural resources by effectively giving these countries what they want. So in 90% of the world's population lives in the emerging world. In those places, you have populations sort of 70% and higher under the age of 24. They need jobs, they need infrastructure, and the trade, and the Chinese are delivering that. Similarly, you see that in places like Canada, where the largest transaction is underway from the Chinese, largest foreign direct investment, $15.1 billion for Nexen, which is an energy company. We know that the Canadians have been a natural resource producer for many years now, but obviously in terms of the attractiveness from China, putting money into the country, it's quite attractive. So symbiosis, number one. Number two is the idea of overpaying. When we use discounted cash flows in the West, we think that China is overpaying. Actually, her approach really makes sense if you have a broader utility function in understanding why they need to access those resources. And then very finally, in terms of this three-pronged approach, is that China is very heavily focused on being a monopsonist, which is basically the key buyer of natural resources. Already for copper and iron, China is the key determiner of these prices, even in the public markets. To your specific question, if I may really quickly, in terms of the political and the economic implications, the economic I've just addressed, they are obviously so sizable, so large in terms of impact that they are influencing market prices. But in terms of the political implications, clearly China has become the go-to country for negotiating trade contracts, for investment, foreign direct investment, for many countries around the world. And that is actually a big piece of the political dynamics that are occurring around the world.
Steve, is this a plundering by China, or is this just prudent free market exploitation of the resources?
Well, I would say it's just free market exploitation of the resources. I mean, they're growing at almost double-digit rates and have been doing so for 30 years, and so they're in the market for things. They want to buy, and of course this has raised a little bit of a firestorm. A lot of people don't want them buying for whatever reasons. But that's on the buying side. Now, on the selling side, they face the same kind of firestorm. I mean, they've replaced Japan as a whipping boy for the United States, and the United States has a variety of completely wrong-headed policies, in my view, vis-a-vis China, and the big one is the currency. And the currency is one in which you had an ever-depreciating yuan from until really 1994. From 81 through 1994, the yuan was declining in value. And of course, what was happening, you had lots of instability in China, not only variance in GDP growth, but the inflation rate went from 7% below the inflation rate in the United States to 20% above the inflation rate in 1994. Then they fixed the exchange rate. And from 1994 until 2005, the exchange rate was fixed to the US dollar, and they had stability. And stability might not be everything, but everything is nothing without stability, particularly when you're talking about a big place like China. So they had stability. Then we continued beating up on them, and now they've let the yuan in various stages appreciate again. And in my view, this has just been completely wrong-headed. The Chinese should have a fixed exchange rate with the U.S. dollar, an absolutely fixed exchange rate, pretty much like they did 94, 2005, and that would give them a lot of stability. Now, the U.S. has done this destabilization before because of bad economic thinking, and of course it was Japan. And Japan, in 1971, the yen was 360 to the dollar, and by 1985, April of 1985, the appreciation, it had been an ever-appreciating yen, and it had appreciated to 80, until finally Robert Rubin realized that the Japanese economy was going to implode if this continued. And so this idea of manipulating exchange rates to favor the United States is wrong-headed, it's dangerous, it's destabilizing for not only the international scene, particularly with China, which is contributing about 35% to all incremental growth in the world now. I mean, they are the engine that's driving the world. So this idea of U.S. policies that destabilize things because probably they're just wrong-headed and never been thought out, I think is a key thing vis-a-vis China. So they're getting pushed back because they want to buy a lot of natural resources. They're getting pushed back because they are expanding and contribute, for example, about 40% of the bilateral trade deficit with the U.S. is contributed by the Chinese now. Not as bad as the Japanese. They were contributing about 60% at the peak in 1990 with the United States. But still, China is facing a lot of problems from the United States with regard to trade and other countries, not just the U.S.
Carly, when you look at the resource question and you think about it in the context of winners and losers, if China is the big winner, who are the losers?
Well, first, I certainly agree that China is getting pushed back for all these reasons. I agree as well that some of our policies are wrong-headed and ineffective. I think our railing about human rights is totally irrelevant, frankly, to the Chinese. They have a different value set than we do on the balance between individual freedoms and collective progress. I say that not in a pejorative way, but it is a factual statement. But I also think the Chinese get pushback because they are not a benign actor in all cases. And I think they think about it from the point of view of their victory in both economic, cultural, and I believe ultimately military terms. I am not suggesting that they are our enemy, but I am suggesting that the Chinese think about winners and losers, and I am suggesting that they behave in less than benign ways. I think, for example, there is no question that the massive amount of hacking that is going on in this country is state-sponsored. I say that as someone with clearances. I say that as someone who's served on advisory boards for both the Defense Department and the Intelligence Agency. I think they are concerned as they look out that while they have had great challenges up to this point in time, and they have managed those challenges in a superbly effective way, that in many ways their challenges going forward are even more difficult. Difficult because of what is going on in the world around them with regard to freedom of information. Difficult because their own population has grown frustrated with both huge income disparity and massive amounts of corruption. Difficult because people in their own country are no longer as content to be, for example, forcibly relocated so that something new can be built or have their private property taken away from them. So I think they face some very difficult challenges, and I think they think about their place in the world as wanting to achieve leadership across multiple dimensions.
Let me ask you to stay with that theme for a minute. In what ways, then, do you think the U.S. is really fighting the wrong battle?
Well, in the following sense. First, I agree that our policies with regard to currency have been wrong-headed, but I would add beyond that, that I think they don't have much suasion with the Chinese. And in part, that is because the Chinese believe, and I happen to agree with them, that we have spent a lot of time and energy manipulating our own currency, manipulating our own stock market. So they look at us and say, you know, why are you talking to me about this? Likewise, I think so when we send Treasury secretaries from multiple administrations over to talk to them about this, I don't think it has much impact, although it may irritate them, as you suggest. I also think that when we send secretaries of state over to talk about their human rights record, it's not relevant to them. What I believe is relevant to the Chinese is their perception of their own economic self-interest, period. No more, no less. I also believe the Chinese, as we all know, are extremely strategic and long-term thinkers. And so I think they have come to realize that they can wait out a lot of policy maneuverings that go on in this country because we tend to, in some cases, change our minds, change administrations. I think the battle we need to be fighting with the Chinese is how is it that we can continue in a productive, interdependent economic relationship, which will require them to play differently with regard to a couple key things. They need to play differently with regard to the protection of intellectual property. They need to play differently with regard to the cyber intrusion. They need to play differently with regard to certain global challenges that cannot be solved without their participation, such as global warming. And I believe we need to press on those issues with consistency over time and exact consequences to their economic self-interest if we are not making the kind of progress that we both need to make.
Dambisa, one of the things that Carly said that is on the top of mind of most international corporations is this notion of hacking coming from the Chinese side. From your perspective, is it state-sponsored, and what are the implications of that?
So I would say that's out of my area. I mean, I can offer an opinion, and I think the sort of general story. Obviously, you read the papers, if you listen to the media, it sounds like it is state-sponsored. I mean, do I have any evidence beyond that? No, I don't. Now, I think it's interesting listening to the commentary here. I do agree that, well, actually, I fundamentally believe that the United States' approach towards China is inaccurate. The reality is China is going to be the largest economy in GDP terms. I mean, yesterday somebody said it might already be. We expect that is going to occur by 2016, according to the OECD, which is just 3 years away. I think all these issues, I actually agree with what Carly said, I think all these issues will fall by the wayside. Human rights, cyber stalking, and so on will become, in effect, irrelevant. What will be relevant is, can they continue to deliver economic growth and meaningfully put a dent in poverty to their population? And there are many countries and many people around the world that are now heavily dependent on the Chinese story succeeding. But more than that, when I hear comments about the income inequality being an issue, I mean, one of the things that's particularly interesting to me is that China's income inequality today, the Gini coefficient, is exactly the same as the United States at 0.47. And more than that, the trend has been positive for the Chinese. And as you know, the United States trend towards income inequality has been on the decline. Those are the issues that matter to the Chinese. I mean, I think we should care about intellectual property. We should care about human rights. But the ideological, both political and economic model under which the United States and Western countries operate, private capitalism, the idea of liberal democracy, are basically the antithesis of the way that the Chinese operate. So I think to focus on cyber is incredibly important because it is sort of accosting our very nature of what we believe to be honorable and correct. But I think it would be to miss the broader issues and motivations of the Chinese political class.
Steve, if all is going well with China, one thing that would always be a cloud for them might be inflation. What's your outlook for inflation in China?
As long as they keep the currency tied to the U.S. dollar fairly rigidly, it's not going to be a problem unless it's a problem in the United States, because the inflation rates in both places will be about the same. The real problem, though, is that right now you have the quantitative easing type programs in the big Western central banks where the interest rates have been manipulated down to unreasonably low levels, either negative real rates or very close to zero. And what this has done, the central banks don't realize the implications of this, in the sense that hot money then goes out of these quantitative easing countries, and where does it go? It goes to the emerging markets. It's a yield chasing kind of phenomenon. Think yield chasing at a hedge fund, and this is going on a massive scale. And so the Asian story, the reason that held up, by the way, so well in the post-crisis period was it's all about the money supply. Economic activity is about the money supply. Forget all this fiscal stimulus and austerity and so forth. It's where is the money supply. Now, where is the money supply in China? If you look at the trend rate of growth since 2003, right now the money supply is about 12% over the trend rate. In other words, the hot money is coming in. Same thing in Indonesia. It's about 10% over the trend rate. All of these emerging market countries are suffering from, they put it in the context of currency war. There's no currency war. It's a ridiculous idea, but that's what they've labeled it. It's just massive flows of hot money coming out of Europe, the United States, and now Japan into the emerging market countries. And this creates a big headache for them. So we're back to inflation. Their problem is going to be fighting too much loose credit and inflation in China, specifically because of the hot money flows. Now, where's that coming from? That's not an indigenous Chinese thing. It's we're doing it to them. They're just the victims, basically. So when we get into this money thing and the currency thing, again, this is just another aspect of doing everything wrong, at least from their point of view, and giving them a big headache. Now, on the trade thing, just one little thing I forgot about as we started. The U.S. is involved with now just started negotiations with Europe, or is going to be negotiating with Europe on trade. Well, this annoys the hell out of the Chinese and makes them very anxious. And you say, well, what's the business of the Chinese, what the U.S. and Europe are doing? And it comes down to the U.S. and the Western countries, Western Europe, they have a habit of regulatory protectionism. Under WTO, we can't have old-fashioned tariffs and quotas and things like that, like in the good old days. But there are all kinds of consumer and environmental regulations that can be put on products and essentially raising the bar, and by raising the bar, impose kind of a protectionist barrier and protect the market. So the Chinese, as paranoid as they are, maybe rightfully so, think that the U.S. and Europe are going to get together to cut a deal and raise the standards and keep Chinese products out.
And that's an example, we may differ on this, that's an example, I believe, of the U.S. acting in its own economic self-interest and perhaps having an impact on China's economic self-interest. I think it's fantastic that the U.S. is negotiating. I hope they can conclude a negotiation with the European Union. But I think that's precisely what the U.S. should be doing. And I think it is an attempt to raise the bar, and it will have a consequence in China.
Well, just to follow up, Carly, the Chinese, you know, I was on some program in Chinese television debating this, and the Chinese were wringing our hands about it and everything. And my view is, whatever the standard is, the Chinese will meet it and compete. I mean, that's, if they change the rules of the game, they will play by the rules, and they will meet the standard. But in the meantime, though, diplomatically, you see, this is another realm where you're basically, you know, throwing sand in somebody's face. They don't know why they were really never consulted about all of this, and why they don't have some seat on the sidelines anyway, and why they're not involved in some way. So that's what these sensitivities.
We may be staying on it too long, but I think part, I think, of a productive policy that the U.S. would apply to China and vice versa is, I think it's fair to say that China is at a point in their maturity where playing the victim doesn't work very well. They are not a victim. They are a major actor. And so for China to say, oh, woe is me, we need a deal on the side, please. I don't recall the U.S. getting a seat on the side while they're cutting deals for resources in Africa. So,
well, first of all, just to that point, I mean, the notion that the Chinese would expect the United States not to act in their own self-interest, I think, is laughable. You know, the United States, not just in terms of this recent announcement with the Europeans, which I have absolutely no faith is going to happen. I mean, I hope I'm around to see if it does. But, you know, there's a catalog of trade manipulation through subsidy programs. You've gone back and forth in farm subsidies. You've alluded to a few of those other interventions in not just in trade, but obviously there's a whole list of policy tools that the United States and the European countries are using today to, in effect, you rightly point out, impact asset prices, impact the policy environments in these emerging economies. The notion that anybody would think that they sit back and think that the United States is going to actually do the right thing in the interest of you know, some external entity, I think is misplaced. I have very little faith in that, and I think everybody understands that that's the case.
Mutual self-interest, who would have thought? Peter?
We have a couple questions. We'll perhaps put this to our economists first. Economists have long said that global rebalancing requires a significant increase in Chinese domestic demand. Is there much progress on that front?
Yeah, so again, to this point of the Chinese realizing that perhaps the American export story will not last, part of that is that they are focusing very heavily on policies that will increase the domestic demand from around 30–35% to somewhere closer to equilibrium around 50%, which I think would be considered ideal. It's very difficult to do that, but they are, if you look at their 12th 5-year program, which came out a couple of years ago, they're very explicitly encouraging subsidy programs to their local population to encourage them to buy white goods like refrigerators and really encourage more domestic demand that way. Is it going to be an easy thing? No, it's incredibly difficult, and I think also some of the risks of inflationary pressures could come from that, and I'm not sure that they're ready to manage that aspect.
Yeah, I think the story on the imbalance, it comes back to the United States. The United States has had a trade deficit every year since 1975. There's only one reason for this. Savings is less than investment. And therefore, the only way you can get rid of that imbalance, if you think it's worth getting rid of, you can cut down on private consumption, you can cut down on private investment. We're not talking about China, this is the US now. Or you can cut down on government consumption. Those are the only ways that you can bring the thing back to balance. Forget about exchange rates and so forth. It's totally irrelevant. It's the savings and investment equation that drive these trade imbalances or global imbalances. My own view is I think you should just let the market take care of it. And the imbalance story wastes a lot of the chattering classes' time because they don't understand it, and they invariably take the wrong policy course to supposedly correct the thing because it's a problem.
I'm going to sneak in a little Master of Ceremonies prerogative. One more question here from our audience. China has enough credit problems to slow their economy dramatically. They've overinvested in industries that are in oversupply. Why should we be concerned about China when they are in the same position as Japan in 1989?
Well, I think we should be just the obvious headline thing is their population, and not only their population, but the network that they've created across the world. Many countries around the emerging world are now heavily dependent on the China story working. And by the way, it's not just emerging markets. You'll be familiar, I'm sure, with the recent transaction that the Chinese have embarked upon with the Australians to basically do currency swaps directly with them. So there are many countries around the world that are heavily reliant now on the Chinese economy functioning effectively. There are huge inefficiencies in the economy, obviously as an artifact of the state capitalist model and aspects of them trying to rejig the economy away from investment towards consumption. But I do worry about commodity constraints. I think that's a big thing for them. But also I do worry that a lot of the pressures domestically to satiate demand and to minimize poverty on the ground will basically incite the political class to do things that are perhaps not market sensible, but much more politically expedient.